Hello. Now, following the sharp market correction for both onshore and offshore Chinese equities in recent weeks, many investors are asking how they should position Chinese equities in their portfolio. We believe that China remains an integral part of any investor's portfolio, both in equities and fixed income. The recent Politburo meeting provides more clarity on the challenges that Chinese officials are facing in balancing the short-term growth trajectory of the Chinese economy with the longer-run policy objectives aimed at creating much more sustainable economic environment. Regulatory reforms are still on the cards for some of the new economy industries where the Chinese authorities see the need to achieve better social outcomes. Investors should also recognize that regulatory changes are not all market negatives. For example, ambitions in self-sufficiency in semiconductor manufacturing and software development, or in achieving greenhouse gas reduction targets. The Politburo meeting at the start of August, chaired by President Xi Jinping, provided greater insights into the economic and regulatory policy direction for the rest of 2021. A decline in growth momentum implies that fiscal policy could do more of the heavy lifting in supporting growth for the rest of this year. Monetary policy has shifted to a neutral stance for now, after some modest tightening in the first half of this year. The MSCI China Index has corrected by around 26% since February. Much of that took place in the past few weeks. In this case, the regulatory uncertainty implies that market sentiment, especially for international investors, could remain cautious for the time being. Now, it is impossible to predict the bottom of any market correction, but it is worth looking back to history and observe what this tells us. The current downturn is far from unique in the context of the Chinese markets, even though the triggers are different. The correction in 2015-2016 was brought by a stock market bubble with excessive retail participation. The stock market decline in 2018 was led by the onset of the US-China trade tensions and a drive to deleverage the corporate sector. But these sharp corrections have been typically followed by medium-term rebound. China is still an essential part of global equity allocation, and technology continues to play a critical role in the country's economic development. Hence, we view the latest episode as a temporary setback where investors would need to understand Beijing's policy objectives of social equality and actively manage their positions.